All right, we're here today with Dave Van Horn, the CEO and president of PPR Note Company. He can give us a brief education on note investing. Dave will go over the pros and cons, what's happening now, and how you should work it to maximize profits and minimize risk. Dave's been doing this, the notes, for, I don't know, maybe 12 or 15 years. I've known Dave for probably almost 20. We go way back. He used to have black hair when I first met him.
That's not fair.
Yeah, well, yeah, exactly. We'll see. But Dave, no, I do appreciate you here, and I'll let you give your story a little bit, because you do have a pretty impressive resume, and you've worked almost as many jobs as I have, in some way, probably more. So can you tell us just a little bit, or tell our audience a little bit about your career path?
Oh boy. Yeah, I don't know where to start. I started in the 4th grade as a paper boy. No, I'm only kidding. Actually, I guess it was just after college. I was an accounting major, and I switched to management, and then got out and couldn't get a job, and I was in construction, and I had a construction business for a good while, and then I went into real estate, so I was a real estate agent, and then I started buying properties, and then I had done a lot of things as far as, I owned a title company, and I had been a property manager. I even sold insurance and things like that, and then as an investor, I did wholesaling and flipping, and was a hard money lender, and got into commercial real estate, and I've done a lot of crazy things, like you said, over the years. I've even traded options, and now I'm into institutional mortgages, right? So you mentioned today, I'm CEO of PPR. We manage several mortgage investment funds that invest in 1 to 4 family residential mortgages, both first liens and second liens, nationwide. That's what I do today. But I'm still a real estate investor, still own, 18 properties I have. I'm still a note investor. And, I think about, what's the vision of, where I'm going. I think it's, my goal someday is to take PPR to even a bigger level. Like, I feel like we're like a rocket ship ready to leave the pad. You can relate to that, right?
Oh, yeah.
And by that I mean is, we're looking at things like crowdfunding. I mean, today we're right around 100 million under management, which is pretty significant. It's different than, say, commercial real estate, for example, where someone will say, I have $100 million worth of apartments, Carl, but they're not telling you they have an $80 million mortgage, right? With us, when we say 100 million, it's real money. It's the whole 100 million, and we recycle that money. So we're actually reusing it over and over again as well. So it is starting to get to become a big deal, right? And I think our vision and mission right now, on a personal level, my mission is to help other people, share, build, and preserve their wealth. That's really, that from some of the groups we're in. But the vision of the company is, as I look at crowdfunding and those potentials, could we become the lending club for secured mortgages someday? And Lending Club or Prosper.com is more of, unsecured companies that are online platforms that utilize crowdfunding. So that's kind of where we're hoping to head. So that, PPR could become a big deal someday, where we're trying to disrupt banking. We're trying to disrupt financial planning. I want people, Carl, to be able to, I want the guy next door, the average guy, that can be able to invest from a self-directed IRA on his cell phone 24 hours a day into a Wall Street investment that he wouldn't normally have access to get a high yield that's collateral, that's secure, that's fairly, safe, track record, that kind of thing, without the fees. So how cool is that, right? That's kind of my dream, right?
Yeah. No, I'm with you, and I know that you're trying to do that. I mean, you opened my eyes, and I'm going to give you credit. I don't know if you stole it from anybody else, but I don't know, it was seven years, maybe a decade ago, you asked me, would you rather a rent check or a mortgage payment, coming in the mail.
Right.
And that's always stuck with me every time I have a tenant call me about a stopped up toilet or a leaky roof or something, and I just go, damn, Dave had it right.
So, the note business kind of got into that by accident. We used to run the Ring Group, and one of the speakers that came from New York was raising capital for pools of mortgages. And of course, I didn't do anything for a while. I sat on the sidelines, but my partner John did. And one thing led to another. And next thing you know, in the downturn of 2007-ish, we decided to, hey, show us how to collect on distressed mortgages, and we'll buy assets, right? And then the rest is kind of history. I had a lot of experience in raising capital myself. I started out doing it for, money for one little real estate deal or real estate project, then later on commercial real estate. So it was a normal transition for me to raise capital for pools of mortgages. And that's what we do. We raise private equity. And then we go out and buy these mortgages. We modify a lot of loans. Our real goal is to try to keep homeowners in their homes. So it's kind of like socially responsible investing. It's very rewarding if we could save people's homes, keep them in their homes if we can. And then once that loan is modified, a lot of people that buy those loans from us are real estate investors who kind of understand what we do, right? So, I often tell people we're all in the note business. We just don't realize it because we all have, student loans and medical debt and auto loans and mortgages and credit cards. So, it's a $1 trillion industry, and I think a lot of people don't realize it, but, it's one of the things that attracted us to this business. And if I can own a cash flowing asset, whether it's in my IRA account or not, that I don't have to deal a lot with tenants and I don't have to deal a lot with maintenance and contractors, and I can still get a nice yield and I'm still backed by real estate, I kind of like that. It kind of beats the stock market in my mind.
Yeah, because you're familiar with it, and it's got a tangible asset that you can actually see, touch, and insure behind it in most of your cases. So you made a pretty good case on why investors want to do this. And I have up on the screen your free ebook, Introduction to Note Investing. What would you tell people that are trying to figure out what to invest in and what would be a good asset? Because I know you're passionate about notes, but how would you help them get started in note investing in today's environment?
When I think of getting started in notes, there's probably maybe a half a dozen ways people get started, right? Obviously, performing notes are easier to deal with, right? My 85-year-old mother invests in performing notes because she doesn't have to do anything. The servicer does everything. So that's one of the beauties of a performing note. You can place it with a servicer. Like we use FCI out of Anaheim Hills. It's $15 a month. They do all the accounting. They send you a statement. They collect the payment. And at the end of the year, you take your 12-month statements, you hand it to your accountant. You're done. That's it. There's no real work in there, unless you have an IRA account and you need a valuation or something. But that's easy enough to do too. And the beauty of that is the servicer, even if the loan were to redefault, the servicer would actually do all levels of service for you. Now, they might charge you a fee to collect on your behalf. If you buy a performing note from us, we actually warranty it. We would step in and help you get it reperforming, or we would buy it back from you. So that's something unique that we do. So a lot of people start with performing notes. Anyone can buy them. You don't have to be an accredited investor or a high net worth individual or anything. You could just be the average person and invest in a mortgage. You can also get started in note funds. In a lot of cases, you do have to be high net worth individual or accredited investor. But it is very passive. You're diversified. You have limited liability. Like you can't really be sued if you're in a note fund. So a lot of high net worth folks like that characteristic. They like the anonymity, that they can invest in an asset-backed investment, being that the pool. And then if one loan were to go bad, it's not the end of the world for them because they're typically investing in a pool of mortgages, right? So that's why a lot of investors like note funds, including myself. Some people will invest in non-performing notes. There you got to roll up your sleeves a little bit more. you got to be able to, reach out to borrowers or hire someone to do that on your behalf. Some people will do that. They'll raise the money, buy delinquent mortgages, and then hire either a servicer or someone who's qualified to go after the collection side of the business, right? Because in essence, that's what it is while you're trying to get something worked out with a homeowner. And then the other ways to get started, or some of the ways that I got started in the note business at first, Carl, was through seller financing. Sometimes I would sell a property. I remember I sold a property over near Radnor where I held a second mortgage on it, and I've done that with, houses in Delaware County where I'll sell the house, hold a second mortgage, and, I have a property right now on the main line where I continue to cash flow off the property, but I haven't owned it in probably close to 10 years now. I sold it, and I'm still cash flowing off that property I no longer own. So that's a neat way to do an investment when you sell a property. Or I can buy a house with seller financing, if I get a senior citizen who, was looking to invest their proceeds and move to Florida or whatever they were going to do. They might give me owner financing. So it's a very good skill to learn and know how to do if you're a real estate investor.
Yeah, but I do have to say I understood that, and I did it myself. And when we talked, we went through a lot of the same steps. But I do have to say that you raised my eyebrow, back when you started taking seconds and doing seconds, even seconds underwater, and then doing that. But you've turned that into a really good business here in the last decade. Do you have any competitors? Every time I turn around,
yeah,
it seems like PPR's out there, right?
Well, of course you have competitors. I mean, everybody does. If somebody tells you they don't have a competitor, I don't know how honest they're being. Yeah, we'd like to think we don't, but we do. I mean, if you really think about it, we have every alternative investment out there is competing for the same investment dollars we are. Because when you look at traditional stocks and bonds, or a portfolio manager, they're looking at our type of investment as an alternative investment. So we compete with those folks. But I guess the biggest one would be hard money lenders, for example, and that is another way to get started with private money or hard money. Was one of the ways I got started in the note business. Before I even got into institutional notes, I was doing the seller financing I just described, or I was doing like hard money and private money for other real estate investors, whether I was borrowing it to do my projects or whether I was lending it. And believe it or not, I did a lot of that in my IRA. So these are great, especially on these hard money deals where they're short term, or the hard money or project where it's a short term flip. They get taxed very highly because it's a short term gain. And I think to do those in your IRA makes a hell of a lot of sense, right? And the one way I didn't mention to get started, Carl, is what some of my staff does. Is they'll go into some of the online platforms like the peer-to-peer lending, which is also the note business. Like Lending Club, you can invest, $20, $25, or Prosper.com, or those types of sites. A lot of the young folks who don't have a lot of money saved up yet can get started in the note business with as little as $25, right? So there's no reason people can't get started in the note business even if they don't have a lot of capital,
Dave, does your ebook cover these types of things? Is that a good way for people to start off?
Yeah. Actually, the ebook gives you a general understanding of the entire note business. The only other competitor that I can think of is, tax lien could be a competitor. They're similar to us, but I don't know that they have cash flow usually, right?
Oh yeah, no, you don't. It's not cash flow every month for sure. It's catch and catch come, when you get paid.
Right. It's like send the money away and then get back,
Yeah, exactly. Risk is important to a lot of our listeners. How do you mitigate it? Do you have any suggestions on that?
Oh, Carl, there's no risk in buying upside down delinquent second mortgages that were in bankruptcy with no equity. I mean, no, I think risk it's all relative, right? It's there's multiple categories of assets we buy, and you can't lump them all together into the same bucket, so to speak. whether it's first mortgages or second mortgages. And I think what I'm getting at there is what's risky. So a classic question for us would be, you know, especially a couple of years back, they'd be like, do you buy loans in Detroit? Now, if you ask me if I bought a high equity loan, then it's really focused on geography a lot, or a first mortgage. Well, yes, we are very concerned about the market and the geography of that. But if I bought an upside down second loan for $80 and it was in Detroit, is that a showstopper? And the answer is no. It's all relative to the risk and how much money is deployed into that risk, right? So it's all relative that way. But you're right. That's what we do as a fund. We're managing risk at different levels. And, you know, we have good data on that, and we have good experience doing that. But I guess the biggest risk could, for a company like ours, could be market risk or supply of product risk. Cost of capital, if it was too high, could become a risk. And then there's probably compliance and regulatory risk. But I think at this stage of the game, that might have been bigger risk when we first started out than they are today. Like today, we have our own servicing arm, you know, where we're fully compliant, we're fully licensed, we can buy products in anywhere, in any state, and things like that. So we're at a different level of compliance today. So it's less of a threat than it was like years ago. But then again, the compliance got stricter too over time, and then now it seems to be going the other way with the current administration. So you see levels of regulatory risk, you know, fluctuate, just like you see the market fluctuate, you know.
Yeah, I was thinking more like, you know, what's the risk to an investor in your company, as an example, you know, and I guess you have accredited investors in your fund you mentioned, and then other people are buying notes and things like that.
Yeah, well, I mean, if you buy the note, the risk is more on you because now it's your due diligence. Did you do your due diligence? Did you know what you're buying? But now, once you own the note, you're in control. You own the asset, right? So it's kind of like you can kind of control that to a point. You know, how well do you work the asset? How well do you know what you're doing? That type of thing all comes into play. Whereas if you're in a note fund, your risk, you know, you're investing in shares of the company. At that point, you're investing in shares of a non-publicly traded company, and you're investing in that management team. So you would have to have confidence in, you know, my upper management team to run PPR. You know, could a company go out of business? In theory, yes, any company could go out of business. You know, it's just like buying stock in General Motors, right? It could go up, it could go down. You know, that's kind of what you're doing. The only difference here is it is an asset-backed investment. We do have assets, and, you know, we do have investment committees, and we do follow certain levels of corporate governance. We actually go by the INREV guidelines, which is a European model of corporate governance. So it's not like we just have random people pulling triggers and doing whatever they want in the organization, you know?
Yeah, no, I just like to hear those things because, you know, obviously we get asked those questions, you know, because our investors, you know, in self-directed IRAs will talk to other people, and then they come and ask me what the risk is. And as you know, we don't recommend or endorse anybody out there in the business because of our compliance issues with our legal aspects of the company. So I just like to ask all our guests those types of things because I know how passionate you are about notes and actually your business. So can anyone invest in the company, or is there an opportunity to invest in your company and make money other than if you're not an accredited investor?
It's funny you say that, but yes, anyone, well, our employees don't buy notes from the company. So, but anyone outside of our staff can buy, because we consider that a conflict of interest, but anyone outside the organization can buy assets from us or invest in our fund if they're high net worth and they can, and they're eligible to invest in the funds, then yes, they can. But as far as a note, anyone can invest with. So the answer is yes, just about anyone can invest with us that's over 18 years old. And, well, foreign investors, if you're a foreign investor, we do require you to have a U.S. bank account and entity. Because it's just anti-terrorism and anti-money laundering issues with some of that. So, but we do have foreign investors as well.
Yeah, that's cool that they come over here and are buying notes from you, huh?
Well, a lot of countries like Canada and all, and they don't have what we have here, so they don't have that opportunity. And we get folks from Australia, New Zealand, all over the place. I actually just did a podcast in Portugal.
Pretty nice.
Yeah, it's different, isn't it? Yeah.
Yeah. So, if I can summarize it, one way with your company is they can invest in a fund at some point, but if they do that, there is less work for them. If they buy a note, from what you said, they own the asset. If they don't pay, they get FCI to help them notify them, et cetera, and maybe even help them go through with the foreclosure, and they would end up with properties. I guess.
Correct.
How often does that happen? I know you said earlier that you try to keep people in the homes if you can, but I can't believe you get 100% participation in that.
Well, there is we call it a hiccup rate where a person could redefault, but our buyback rate is when occupied is under 5%, so it's about 5% or less. For us, we warranty it, so the people that buy notes from us really don't encounter that challenge. Now, if they bought a loan from us and it wasn't performing again, they actually have the option of pursuing foreclosure and taking the property, or having us buy it back. And there could be scenarios where it does make sense for them to do that because maybe the property went up in value. It's California or something, and there was a dramatic appreciation. They might not want us to buy it back, right? So.
Right. So that is less risk to the investor, because they then have the choice of letting you buy it back or not if it defaults.
Correct.
Pretty interesting
liens,
model.
Yeah, with first liens, I mean, you're most of the time being in first position, you're usually fully covered, especially today as equity's coming back in the marketplace. So yes, I mean, second liens, the warranty is probably more impactful, if that makes sense.
Yeah, no, it makes perfect sense. So where do you think the market is now compared to, can you give us a little thumbnail idea of where you were 10 years ago?
I'm going to dust off my crystal ball for you.
No, I'm talking about going back and where we are today,
You mean the note market or the real estate? Notes are in direct correlation to real estate values, right? So if real estate's going up, note prices are going up. If real estate's going down, note prices are cheaper. The note market's definitely up. I mean, we're seeing equity coming back in a lot of markets throughout the country. Now, they're not all coming back at the same rate or to the same level, but generally speaking, that's the case. And most of them are back to the pre-crash levels at least, unless you're in San Francisco or something, right? So a lot of these markets are booming again. And then what that means is we've been experiencing, higher priced assets when we go to purchase, but we're also seeing our portfolio went up in value dramatically. We're also seeing a lot of cash out. So, and when we get a cash out, which means the borrower refinances or sells their property and they pay us off early, that means our yield went up. So it's not a bad thing for us that, we made more than we thought, right? So so that's kind of what's happening right now. So it's all relative, and in an up market, you tend to get in and out of deals quicker. In a down market, it takes longer. So part of investing in the note space is a time for money equation, and that's a function of the market. And that's why, if it takes you longer to get out assets, that's one of the reasons assets are cheaper, right? If there's less equity backing the houses behind your note, that's another reason they're cheaper. Today, you're seeing the opposite, right? You're seeing more equity backing the assets that you buy. So it's an interesting time. I mean, now, will the real estate market continue? I mean, that's a big question as you see them start to raise interest rates again, or you start to see some new tax law changes as to how much mortgage interest deduction will you have? Will people move as frequently as they did in the past? Will that make more people rent their house out, you know, because they don't want to pay the tax on the increase, or who knows? We don't know that impact yet, I guess. Carl, are you still there?
Yep, no, I'm here. Do you have any?
I didn't know if I put you to sleep with.
No, I was just trying to figure this out. I know that.
Well, with interest rates going up, there's a weird dynamic, because a lot of times when they raise interest rates, real estate values start to drop a little, you know. So, but we don't know. It seems like there's pretty good demand for housing because new construction had been down for so long, you know, coming out of that recession. There wasn't a whole lot of new construction activity. Right now, you're seeing a ton of new construction still going on, and most of the, like, you know, I'm in the Philadelphia area. It's winter time right now, and all the contractors I talk to are still busy, which is kind of neat. And most of them seem like they have a significant amount of winter work, which is usually not what would have happened 3 or 5 years ago, you know.
Yeah, no, I'm seeing the same thing. You know, you go to almost any of the major cities and you're seeing cranes up in the sky. I kind of look at that as a benchmark to see how construction actually is, because you get different numbers on different data points on the internet, but when you see the cranes in the skies, you pretty much know it's happening.
Yes, and you also have what happened with all the hurricanes and stuff, right? So you have Florida, Houston, Puerto Rico. There's a lot of activity, and that could even create more construction shortages if a lot of contractors went to those areas to help out, you know? So it could be, or there could be shortages in drywall, and Home Depot and Lowe's supplies, and things like that, where you're going to see the cost of drywall go up, which will drive up the cost of new construction, which could drive up real estate values, which could also, you know, and we're also starting to see rents climb right now. I think I was at a meeting last night where they asked the entire room, there was like 40, 50 people there, and they were all raising their hands, all the investors that had just recently raised rents. It was like everybody in the room just raised their rent. Yeah. So it's interesting to see. Now, a couple of years back, nobody would have been raising rent.
Right. So, they were just happy to get them paid.
They were just happy to keep them occupied, right?
Yeah. So let me ask another question. You guys do a lot of education. I know that you had me on a call, I don't know, maybe a couple weeks ago. Do you do that for all of your clients, or is that just for anybody who wants to listen? And if you don't mind, if you can, talk to us a little bit about that call that PPR does. And I know you're a member on the board of the Strategic Investors Alliance. Can you tell us what's coming up in that way, so if any new investors are out there, where they can get help and understanding and different ideas for plans on what
sure.
to do?
Well, you're right, Carl. So we do, we have Q&A sessions that we do, question and answer, and you know, we typically do them, I guess we do the Q&As every other month, and our next one is in January. And, you know, we pretty much send it out to the whole universe, but it's open to anybody, and they can get on and, you know, ask questions about, you know, anything note related. And a lot of times, like you said, you were a guest on there, and we have, you know, typically we'll have a different guest on there, and then we'll, you know, we'll cover a different topic for about a half hour, and then we'll answer any note questions or deal questions people may have. And then a lot of times we'll even go into, what do you call it? Actual general questions on the note business. So, and I usually have a couple experts on. I have the manager of the Law Smith department on it as well. And, you know, it's very interesting, you know, way to help people out, and it's free. And we're limited to 1,000 people, but it's free other than that. So as long as you're on time. And then we have the Strategic Investor Alliance, which is a group for high net worth folks. And basically that group acts like Yelp for high net worth type of investment vehicles as well as advisors. And I think our next one there is January 23rd. And, you know, it's pretty interesting that, you know, we make this available to our people. And if you go to our website, you can always see the schedule of our upcoming events. And then we also have a live event in April, a Mid-Atlantic large conference, which is a Mid-Atlantic Summit, which you'll be at, right, Carl? And that's, for all types of real estate investing, as well as notes and self-directed investing, and those types of topics will all be covered there. So yes, Carl, we do a lot of education. Some of it's online, and we do a lot of stuff through Bigger Pockets. So a lot of people can go ask us questions on Bigger Pockets in the forums. We're very active there. Or they can read articles and we'll answer their questions, that type of thing.
No, I appreciate that, and I think our listeners will do that. I've got your PPR website up there, and I've got your phone number, 877-395-1290. I know you just recently moved to a bigger office, so I hope that phone number is still good.
Yes. It's 877-395-1290. And our next Q&A, I don't think I mentioned the date, was January 15th. And the next Strategic Investor Alliance meeting was January 23rd, actually at the Pyramid Club. With yours truly, we're going to be, I think our topic's Bitcoin this time, or cryptocurrency. So we do a lot of different things in that group. And we meet every other month there as well in this area. So.
Okay. The other question I have for this is, I'm on your website, and if people want to get notices, I know you said it, you sent it out to the world. I know you use Facebook a lot, and I don't know what other social media you are, but if they want to get on your mailing list, I guess maybe either getting a hold of your free book, we'll put them on there, or they can hit your website, which is pprnoteco.com, PPRNOTECO. And they can, will that get them on that list so that they hear about the Q&As and things?
Yes, it will. They can also sign up for our email newsletter as well, and then they would also get, on that site, there's a place to sign up, and then they can get the email newsletter. And if they do either of those, then they're in the tribe at that point, right? So pretty much anything they sign up for. They can also register to be a note buyer, or they can find out more information about the current fund offering on that same site. So if they want to invest in notes or find out more, or they can even set up an appointment. They can actually schedule an appointment with one of the advisors from the investor relations team to go over, hey, how do I go about, investing in a fund with my self-directed IRA, or buying a note with my self-directed IRA. These guys will help them out. Yeah.
Yeah, of course. I was going to ask you think this is good for a self-directed IRA account, but you said it so many times I didn't. I just felt I'd be plugging us.
It's a great question, but no. To be quite honest with you, it's probably in the 35% to 40% of all note sales or even capital raised. It's in that range. So it's a pretty good number of qualified plans that invest in notes and in note funds. So it is a why I think it's because it's so passive, especially the note funds are pure mailbox money. It's ACH on the first of the month, and you basically you're not doing a whole lot, right?
Right.
And even the actual notes, what my wife always says, right, Carl? She never complains about my notes. She'll say, "You're not going to die and leave me all that junk real estate you own," but she never says that about my notes. She just sees the money coming in the bank account,
Yeah, no, I don't want to be sexist, but we do have a lot of women that think the same thing. I don't want to own the real estate, but I don't mind owning the mortgage, and it brings me back to what you told me, 10 years ago: rent check versus a mortgage account, and your wife's a perfect example. So I know you're, or I know we're out of time, and I appreciate you giving us this time and your insight on note investing. But if people do have questions, what's the best way to get them answered? Going forward here.
Probably the two best ways is that you can reach out to me on Bigger Pockets. I'll connect with you right away there, or you can just go to the website. We have a Contact Us page. You can actually ask a question right on the website. You can also jump on that Q&A call and ask a question. And you can even call in. We have customer service people here just to answer your questions, really. If you call 877-395-1290, Tom and Peter will more than happy to answer any of your questions about anything note related. And if nothing else, they'll point you in the right direction if they can't help you. But I'd be pretty shocked that they couldn't help you.
All right, Dave. I appreciate you doing this. I'm sorry I went on so long, but thanks a lot for your time. I really do appreciate it. And one more thing, don't you have a new book coming out? What's that on?
I actually have a book coming out. It's in conjunction with Bigger Pockets and Ingram Books, and it's called Real Estate Note Investing, a Niche Strategy for All Investors. And it should be out in April, beginning of April. And it should be on Amazon and Barnes and Nobles and all that good stuff. And should be a good read. It's about note investing in all areas of your life, not just I go into a lot of different financing hacks, so to speak, and some case studies and good stories. Yep.
No, I again, that's great. Dave's one of the guys out there that has done quite a few things and can save you a lot of time. He's made a few mistakes in the past, and if you don't have to repeat his mistakes, I think it'll be worth it, Dave, just to read the book to stay out of some of the things you did wrong.
Yeah, what to do and what not to do, right, Carl?
Exactly, that's it. So again, thank you very much, Dave, and I look forward to seeing you at the next SI event in January, and look forward to getting an autographed copy of your book when it does come out. All right. Thanks a lot,
All right,
Dave.
thank you, Carl. Take care now. I'll see you again.
Bye.